What's going on, guys? Good morning. Good morning. This is Terrence Ray back at you with a weekly stock market update. This is where I go over, my projections of what I think is going to happen in the market this week, and I go over some market structure, go over some charts, and I'll even go over some potential trades that I may take in the week coming up. And I may start doing this a little bit more on Facebook, coming on Facebook Live and maybe showing some trades that I'm doing or something like that. And we'll see how it goes. All right. So last week, the expected move. Now, for if you're new and you're new to the channel or how I do things. So every weekend I do a video and I go over the expected move. The expected move comes from the option chain. I come to the option chain and I'll find out the weekly expected move. Now, based upon what that expected move is, that'll tell me how volatile I can look for the market to be. Give you an example. So the week ending on uh, September 20th, we got an expected move of $84. This is, and I can see this on the option chain. I have an option chain pulled up of the SPX, right? Which is, this is the S&P 500, right? So the 500 largest stocks. This was what comprises or makes up the SPX. Now, SPX is only options. You can't buy stock in it. And if you want stock in the S&P 500, you have to purchase the SPY. Now, here's the chain, right? So what I do is I take this, where you see this ruler is for the week, and then I mark it on my chart. So basically what that's telling me is the market is anything within this range right here would be normal, would be a normal move, what we can expect. So we can expect if it goes outside of this range to either direction, it doesn't tell us which direction it's going to be. It just tells us what volatility is saying about the upcoming week, option wise. And the option, you can take that and apply it to the movement of the stock. Now, there are ways to trade around that. If I have something like if I have something like what my expected move here, I can always come to the option chain. You don't necessarily have to buy or sell, right? I mean, buy and just hold it and pray that it goes up. I could do something like sell outside of this range, meaning I could pick a neutral trade, come out here, sell the 55.35 and buy the 55.30, come to the upside, sell the 57.20, by the 57.25. Me doing that, that is called an iron condor. That is a neutral strategy. That's saying that, hey, I'm placing a bet that the market will stay in between this range by the end of the week. That's just an example of something that you can do. Now, with it being $84, last week it was $115, the expected move was. And this week, with it being $84. So, what that's telling me is that we may not get as much movement as last week, but that's still pretty good volatility. Like that's more than what it's been when it's just drifting up. So we can see that the market came up here, fill this gap right here, and then it may move down a little bit. And so then we seen on the 11th, which was, what was the 11th? Wednesday. I think we had some news. On Wednesday was a crazy day. The market was down, looked like it was going to continue to go down. Then it just whipped up. That's what you see, this long candlestick. You see this long wick right here. Market pushed higher, and now we're moving up toward all-time highs again, right? Excuse me. So if you own stock, you might just be holding. You might just be somebody like, hey, I don't really do a lot of trading. I just hold stock. It looks like now I expect the market to slow down a little bit, maybe right here and chop. But then overall, I expect it to continue to go higher. Okay. Now I'm gonna show you some levels that I have for the SPY. I'm gonna click on something else. Now remember, SPX is only options. Now the SPY is the ETF, which you can own if you want to own the S&P 500 and collect, it pays dividends, and you can also trade options in it as well. Now I have Fibonacci levels on here that I placed. Um, Now, if you follow me on YouTube, you can follow my YouTube channel and you'll see that I go over how I come up with these levels. The next level up is right around 570, right? And we got about 8 more bucks to go. I do think we will get to that next level. Um, if not this week, maybe by next. Because I expect to get up here and see a little chop. So I wouldn't be surprised if it tailed off a little bit and then went higher, like maybe Monday, Tuesday, excuse me. See? And then maybe Wednesday we see it turn and go a little higher. I would expect that. Let's go look at the QQQ. Now, the QQQ basically is an ETF of the NASDAQ. The NASDAQ contains, I want to say, about 100 stocks. These 100 stocks generally are more along the line of tech companies, like your, I want to say, Apple, Meta, Google, Microsoft, Tesla. Those are the stocks like that are in your QQQ. The triple Qs generally is has larger swings than the S&P 500. So most of the time, not all the time, if you get a move in the SPY, then you'll get an exaggerated move in the Nasdaq because it's the tech companies tend to move faster, right? Now, you can see that it's not anywhere near its all-time highs though. So we can see I have levels for it. Now it hit a level here and then it tailed down and then now it's going up as well. I do expect for it to go a little sideways. You just don't. I could be wrong, but you sometimes you just don't expect the market to just go straight up, but it can. I have a call option in the queues just to show you all that I am talking my book. I own a call option, and I got about 33 days on that call option. Now, I don't advocate buying calls. Call is tough to sit through a call because you lose data. If it don't go your way right away, they can be expensive, right? With that being said, I do have one on here, right? Um, because I do think it'll make it to 495. Now, when hopefully it'll make it there by within the next week or so. If not, then I'll burn it and take whatever loss I have at the time. Currently, if someone was to buy this call option right now, it would cost them about 350, anywhere between 350 and 355, $355, right? And let's say it was to go in the money, it would be worth about 1200, right? That's almost like a close to 4x on your money. That's an outside chance of it doing that. So, like I said, a better way and a more, I would say, a more economical way, more efficient way to do it, or maybe be to do like a call spread, maybe buy the 475, sell the 480, pay the 277, and then place a bet that the market will go up. And at least that way, you won't lose money on theta decay, right? I go more on Facebook. I do a little bit more going into depth because I've talked about this more already on other channels. Let's go and take a look at stock. I really want to look at is Meta. We're gonna look at Meta because I'll be looking at this one this week and really watch. I've been watching it for a while. If you zoom out, you'll see this is a 1 year chart, and you see this little pattern up here we got going, right? And then on Thursday and Friday, Thursday it gapped up, gave us this big green candlestick, and then on Friday, the body of this candlestick is inside of this body, right? In Japanese candlesticks, they would call that something similar to like a pregnant woman or something like that. There are some books you can read on Japanese candlesticks, but that's what it would look like. I could show you that same candlestick pattern. Hold on, before I go to do that, generally when you get this, you get a large move. Now it could come down, fill this gap. I don't know which way it's gonna go. I do think at the end of the day, it's gonna break out of here at some point. I do think we're gonna get a move, and then it's gonna come right out of this range and go higher, right? I don't know if the sideways action is done though yet. That's the only thing. So Meta, in my opinion, isn't a bad play to hold long term. At least get out of this range. Then you might want to start taking some profit. But I'm gonna show you a similar pattern. Let's go to the daily. You see that? You see how this is in Meta? Now I'm gonna go and look at Regency Centers Court. Let's zoom out. Let's go out 3 years. Let's go to a weekly. I'm gonna show you guys something. I'm going to go out a little further. There we go. You see Regency, similar chart pattern. See, we got these touches in here. Now, this is a weekly chart. This is a 5-year chart, though. So back starting when it started this range, this was back in 2022. So it basically stayed in this range for 2 years. Now, look, when it came out of this range, it started going higher. Here go your highs right here, back from, what is that, 2021. I do think at some point it's going to take these highs out. I've been talking about this stock in previous videos. So if you're in it, you're making money. I would be a little cautious getting up into this range. Maybe you want to turn it into a covered call, start selling calls against your position. And maybe you can think about taking profit. Owning this particular stock, like I said, this is I don't know if I said it in this video, but this is a REIT. It does pay a dividend. So you've been making a little money in this particular stock. Let's go back to, so with that being said, with the pattern like this, I expect something similar to that in Meta. That makes sense. I expect something similar to that. We get up around here, we should see an aggressive move outside of this range. And to wind this video up, I want to take a look at Netflix. Netflix is giving us some real good action. We got another Harami. This is nasty work right here. Now, you look down here at the bottom, we got a squeeze indicator. It's red, showing that it's in a range. We can see the range right here. Let's draw it. Let's make it. You can see the range that lines up with our squeeze indicator right here, guys. There's your range, right? Netflix gapped up over the 9-day moving average. And then we got this big green candle right here on Friday. That's nasty work. Right here, I do expect Netflix to get up here around this range right here and challenge these all-time highs of, let's call it 711.33 up here. Right now, we're at 697. We got a Harami candlestick pattern right here. Here's your candlestick. Here's your body inside of that candlestick. Let's look for a big move. We need to see a big move right here. This may be something coming into this week that I may look at scalping. So Monday morning, I'll be coming in here. Now I'm gonna drop down to an hourly chart and look and see how I play this. Now, I would like to see, to be honest with you, hopefully, I want to see it pull back a little bit and then try to get long in here. I don't like getting long when the stock is already up, right? So I would like to see it pull back a little bit, come in here and consolidate, then give us another big move. You may not get it though. I won't chase it, right? I'm not gonna come in here and chase this move on Monday, but I wouldn't be surprised if we get a higher move to take this out. So the stocks I like to look at this week, number one, I'll be watching is Netflix. Um, I may do something safe in there, something I really ain't tripping on. Maybe come 33 days, maybe buy a call spread, cheap call spread. Buy the 695, sell the 700. Don't cost me that much, and then see what happens. Or sell a put spread, maybe come um sell the 645, buy the 640. I don't like that. You're not getting paid enough. Y'all have to come closer, take more of a little bit of a risk right there. But ideally, I don't want to get in right away. It's already up. Let's see if we can get a little chop. Pull back, get closer to the 9-day, get a little chop, and then try to take that move higher. But let's see what we get for the week. But hey guys, hopefully you got something out of this video. Um, hit the like button, share the video, follow me on YouTube, and I'm gonna be out. Peace.